Good morning, my fellow traders. Hope you all enjoying your weekend and yet another great week in regards with the trades. And these type of weeks can make up all your losses, means it covers all your losses if you had one. And in regards with priority group, we had 2 winning trades out of 3, and that is also awesome. The trades I've just sent in the group, excluding my own personal trade. If I add that, again, that's going to be really profitable. So overall, we are profitable this week in the group, and I'm going to show you and talk about the prediction I made throughout the week of different commodities, which is palladium, crude oil, copper, net gas, and other major commodity I'm going to talk about in this video, how the prediction played out nicely, and some commodities that did not play out. That is something we need to talk about as well. And every trade is a lesson. We need to learn lesson from every single trade. And in this video, in the first part of the video, I'm going to show you one trade that has a very good lesson, which I've personally taken. I lost one trade and then I've taken another trade. How it can play up with your mindset. It is something I want you guys to learn and make your trading stronger. And that is what I want to do and dedicate this weekend's video for you for free so that you can learn as much as possible in this long weekend's video. And if you're someone who wants to watch this first part of the video, I promise you're going to learn tons of knowledge and you're going to take something out of the first part of the video. If not, you can always skip it to the timestamp you can see at the start of the video, or you can always refer to the timeline you can see and skip it to directly to the commodity analysis part of the video. So we're going to go through commodities, forex, and also, very important, if you are a member like from day one when I started this members only live session, I think so, it's been like almost a year, I started to teach intraday trading to my members. The way we can do scalping on 5 minutes time frame. It is something I've been doing from last 2 to 3 weeks, and that is something I want to show you how we managed to take some good trades on 5 minutes time frame. So, going to be exciting and going to be very important video for you if you want to watch the first part of the video. And then in the second part, we're going to do analysis of net gas, gold, silver, crude oil, and I'm also going to go through this week US cocoa due to huge demand. So starting with a commodity, your favorite commodity and the number one most traded commodity, it is crude oil. Now, it is not one of my favorite commodity that runs technically fine, but sometimes you call it, if you take a risk in trading, the more the risk you take, the more the money you make in trading. And that is what you call trading. But your risk can't be blind. Your risk must be calculated. With the rules, if you add rules in your risk, then your risk becomes your business. And every business has a risk. None of the business is risk-free. That is why risk management is very important. Now, talking about crude oil first. A very good trade. Now that is an insane amount of profit, and it is a good example for your mental psychology, patience in this trade, a trade for the less aggressive trader, a trade for the aggressive trader. Every lesson is in this one single trade, which I'm going to break down one by one. I hope you guys are watching here. If yes, let me know by hitting a like button here. So starting with a zone right here. Now the reason I've started with the crude oil because it is a commodity that I do analysis free for everybody here on the YouTube. With that, of course, I sent these zones a day before I release my video to my members. Of course, they're members, they pay for it. That is why they get these zones first. But very next day, I've mentioned these zones in my Monday's video. Members get these zones on Sunday, and on Monday I mentioned these zones in my YouTube. Now, first, let me show you how the rules play out. First, we need to look at the report I've sent to the members. Now, what do you see here? The report was sent on 5th of January. The New Year's report, and that brings some good profits. Now, I've redone the zone after I've recorded my weekend's video. After that, I made this report. And what do you see here? That a crude oil has broken above the structure level in green. And if the price pulls back to this level, I'll be focusing on this level for my possible buy trades with a pullback. So once the structure is broken, what happens to the support, to the resistance area, it turns a level of support likely. If you turn back and see, what do you see here? Previously, we were looking to enter the sell trades from this zone. But do you see any sell candles here? No. No conditions mean what? Means no entry. No sell candle, but what do you notice in this zone? That this zone has acted as a good level of resistance previously and a good level of support previously. A massive level that has pushed the price up and down in a massive manner. So once the zone was broken, what I was looking for? I was looking for a pullback entry, bullish, or an aggressive entry at 50% retracement, or an entry that price hit my zone and then forms a bullish engulfing pattern. In the report, we were looking for the bullish engulfer or a double bottom. So we had an aggressive entry, which is a bullish engulfing pattern. Not sure how it forms on a chart, but on my platform, that is a valid bullish engulfing pattern. Now, let's quickly see what I've said in that video so that we can connect the dots and you can see and learn how we can do the analysis as accurate as possible. Or with the Fibonacci entry, if you look here, if you want to use the upper level, that is fine as well. 50% can be buy limit, order take profit can be 1.618. Retracement stop loss can be below this pattern. Again on crude oil, Fibonacci entry can be very, very risky. Or you can use the lower level as well if you want to see some more retracement. Use this level for the 50% retracement. Crude oil has now just hit the 50% retracement. For aggressive traders, the entry has been triggered. Now it's totally up to you if you want to manage still this area that can be very risky. So make sure you manage your trades. So for me, a pullback entry above 50 EMA is still in the play. If that happens, I'm going to go long from here for the less aggressive traders. For now, just buy trades for crude oil. Again, I'm still bullish for crude oil and I'm still looking at the pullback entry bullish for crude oil. Nicely pushed up a nice bullish engulfer. Now, as mentioned yesterday, aggressive entry was triggered here and then we have a deep retracement. Now we have a pullback entry bullish. If you are an aggressive trader who's already in the trade right from 50% retracement, then 1.618 retracement is something I'm expecting a price to get to 76.66. From where we can see a possible push down. Perfect. So that is what you call patience and taking your trades with conditions. Aggressive entry played out. Less aggressive entry played out. Entry from the zone that was sent to the members right here on 5th of January. Look for this zone. Look for the pullback has been played out. All three conferences, good factor. And that is what we call taking your trades with the right rule and education, not entering your trades blindly and not gambling the market. Awesome. So you see the lesson I've talked about earlier. 3 lessons. Number 1, mindset and patience. Number 2, waiting and patience and discipline. Number 3, are traders who are not a very aggressive traders. Right here. So first I mentioned that when the price push up, hit 50% retracement, I've said that the order has been triggered, and for the aggressive traders it's going to be risky entry, but it gives you better reward to risk ratio. So 1.618 retracement we were looking for, that was clearly mentioned. Now for the aggressive traders, the way you enter exactly at the 50%, keep your stop loss below this pattern and take profit. You can go of course 1.8 to 1 reward to risk ratio. That is what a beauty of this pattern. It gives you a very good reward to risk ratio if captured correctly with the rules. If you are my student, you know full rules for that. Now, that was mentioned in my YouTube video, and right here, what happens? The price pushed up, you have all the excitements. Then the price pushed down, right here. You're back in the loss, and then the patience plays here. Now, the 2 things could happen. Number one, it could hit your stop loss and you are out of the trade. That is fine. Number 2, if you are disciplined enough, you have accepted the loss before you entered the trade. Now, once you enter the trade, you said, yes, I'm going to set my stop loss here and I'm only going to exit my trade if the price hit my stop loss. Otherwise, if I've decided to enter aggressively, means I'm going to only exit my trade if it hit my take profit or stop loss. Now with these big take profits and especially swing trading, it wanted to take profit straight away unless there's a dramatic news event. So after this push up, of course we had some consolidation and pullbacks, and then eventually it pushes up. Of course we have some fundamentals included in that fueled your take profit. Now we're not gonna take any credits for fundamentals, because when my stop loss is hit due to some major news where I've entered technically, I don't blame fundamentals. Vice versa for take profit. If my take profit hit because fundamentals goes in my favor, I have entered the trade before anything has happened. So I'm looking at my technical and my own education and my own methods of entering those trades. So fearfully come back here. Now here what happens? The less aggressive traders entry has played out. Now if you're someone who said, no, I don't want to enter aggressively, I want to enter less aggressively, which is if the price hit my zone, if the price forms bullish engulfer, we had a good pullback, number 1. Number 2, we are in the zone that was already mentioned in the zone and in the video. That is a 2 confluence. So for me, that is a better entry. I'll wait here and then let's manage this trade to 1 to 1, 1.4 to 1. Let's say you have entered right here and you just want to go 1 ATR below the wick and just want to go 1.4 to 1 reward to risk ratio. That is also good amount of profits. It's your preference how much risk you can take, how nicely you can do your risk management. For example, you want to manage your risk, something like this, keep your secure or take profit, move your stop loss to break even. In that case, price didn't even come down to your stop loss and you can keep on managing your trade, let's say till aggressive take profit, which is right here. So that is how we do the full analysis. Trading is not just sitting by your phone and play buy or sell button. It is a game of analysis, probabilities. So lesson number 2, yes, less aggressive traders waited with the patience and the reward paid off. Now, I'm going to take you one of the very good trade we took in the priority group, and there are some commodities which I'm still paying attention for the price to hit the zones. Hopefully by next week or the week after, I'm going to show that results. As well, the zone sent to the members, for example, for copper, palladium, platinum, wheat, coffee, sugar, corn, all these zones, we are still waiting for the price to hit and react. And I update these zones every week for my members as well. So now I'm going to show you one trade which I took personally and sent it in the group as well. Starting with this trade, a losing trade, yes, of course. Now, a very good lesson in this trade. If you're someone who learned from the trading, who learned from the mistakes, that is an example and that is something you need to learn from these trades. Now, this was a trade alert sent to my members. That what do we have? Now I'm going to show you the analysis behind this signal. Price broke above 50 EMA. We had a pullback, nicely pullback. We had a bullish engulfer. Yes, I did not enter here. I wanted to enter a little bit below because I want to have some more pullback. That would have been a losing trade as well, but I entered right here at bullish engulfer. Now AUD is not one of the best performing pair for the pullback entry, but still that was a nice trending market I looked for. That is why I looked for an entry right here. For example, for the bearish market, nice trades we took previously. So in the bullish market, I want to enter this trade as well. So I went back on a daily. I've said that, okay, the price is above 50 and 20 EMA as well. And we are above 50 and 20 EMA as well. So on both time frame, we are bullish. So I decided to enter this trade. Now, what do you see? The price just hit my stop loss, a reality of trading. Now here, the emotions are, oh my God, why that hit my stop loss? The first trade was a winner, which I'm going to show you very shortly. And then the second trade, which is this one, was a loser. You said, oh my God, I've lost the money which I've just made. And that caused you to do revenge trading, which is something we don't want to do. Yes, that was a shitty feeling, but see that entry pattern here. A trending market broke above 50 and 20 EMA. We had a pullback followed by bullish engulfer, a condition I talk about in almost every single video of my YouTube. Now I want to show you one more trade, which is right here in front of your screen. For you, for the keyboard warriors, I've taken this trade myself in my own personal account. If I send a trade alert to you, I am also taking that personally, excluding my own trades which I do use for the different strategy. Now this was a trade that was sent to the members. That was just less than 1% of risk according to my account balance. That was a trade I've taken. The take profit was hit, as you can see right here, and the trade alert was sent to the members right here. Now it is not something I just entered randomly. First thing, you have seen the Euro-Japanese Yen losing trade. Second thing, I want to show you that I've already warned my members that major news event is ahead. So be careful with your risk. Make sure you have your stop loss there. Don't trade without stop loss because we have an NFP and that can move the market massively. It could be against you. In this case, we entered technically, but the market goes in the favor and then pushes back down. And before that, I've also explained about this pair in my live session that only enter buy trades once we are broken above this little horizontal line. And let me show you a quick clip from the live session with the members where I've mentioned that clearly to get yourself prepared for that. We were at USD Japanese Yen. Unless and until we are not broken above these highs, we are not taking any trades. For now, just pullback entry bullish. Once we're broken above these highs, pullback bullish engulfers. Something I'll be looking at for my possible trades. Perfect. So as you can see, I just want to show you my real account has been connected. As you can see, this trade was executed on my account. IC market is connected right here and we are right here. So you see, the first Euro-Japanese Yen trade was also above 50 EMA. We waited for the pullback followed by bullish engulfer, and that is something we had right here happened on this pair. And with that, we did not just enter blindly. We waited till the price break above this horizontal line, and then with the pullback, I've said that if we have a pullback followed by bullish engulfer, only then take your trades. So we waited for that rule to happen and play. And once the rule was met, no ifs, no buts, yes, I have taken that trade. That nicely hit my targets right here with the exact rules, and that is something you should do as well. Follow your rules, have your rules. Without rules, you are just gambling. It is not trading, and you can never become independent trader if you gamble in the market. You can make money for the short while, but in the long run, you're going to lose all your money or possibly blow up your account. Then we have what? Another trade. CADCHF, not one of my best performing pair, but we had some nice bearish trades out of this pair consecutively, third time a winner. The first one I took right here with this Fibonacci, with this 382 candle. If you are my students, you know that strategy with the full rules. The second one is right here, which is my pullback entry bullish right here. That nicely hit my profit. Now, once the price broke above the structure level, here we had a pullback. Pullback to where? Pullback to the recent structure that was recently broken with this candle, and it was likely the price going to come back and retest and possibly push back up. It is something I talk and teach in my YouTube videos as well. Then I've gone back to a daily time frame. I've looked here. Yes, we are getting a cross as well. The price is above the structure level as well. So why not take this trade? Because it adds up every single thing. For the students, a shout out: when you take your pullback entries, don't just try to trade and every single market there. Make sure you look at small factors, but for now, focus on the rules. Once you have rules on the fingertips, once you start learning and start becoming a break-even trader from a losing trader, then look at these factors on a higher time frame. Look at the structure levels. These things can add up in your winning ratio, and that can give you more odds of winning. Now here, the odds were in my favor. We entered right at the pullback. So I've entered A, then the price quickly pushed down. Again, the emotions play. What if that turns out to be a losing trade? But once you enter the trade, you have accepted the loss. So no matter what, it's going to hit your stop loss or take profit. So that nicely hit the take profit as well, hitting 1-to-1. But that is what I recommend beginners to start with, 1-to-1, and then start to manage your trades. Now I want to show you some forex trades we took. Means going against the trend or following the trend with aggressive entries. So here with example of following a trend with aggressive entry when the structure was broken with the pullback, we're going to take the trades. So first we have AUD CAD. Now here that was clearly mentioned before the price action hit the zone. Now for the traders, when I upload the report and send you the notification and buy me a coffee, make sure you check your portal. Even if you don't receive an email, that once you receive a notification, you can always download your report free from your portals. Now here, this was the pair sent that the pair has just broken below the structure level, which is right here in red, and indicating if the price moves into the red zone, it will confirm that trend continuation. Means if the price pulls back up, it will likely to push the price lower, from where I'll be looking to enter possible sell trades. What happens here? This was not sent as a signal. Like I mentioned, it is not a signal group. Look at these entries and then spot these entries yourself. I had a losing trade right here, but that did not hurt me because I was patient. Okay, there's a losing trade. The market did not continue to push down like this. Instead, if the market pushes back up, I have my zone there. If the price gave me a reason to enter, which is what a bearish engulfer, that was also mentioned in my Discord group with the students only in MMTA core students, and we have a bearish engulfer. And here, that nicely hitting 1.4 to 1 reward to risk ratio target. If you would have set the fixed target, something like this, hitting easily 1.4 to 1 with the exact rules. Then we have GBPUSD. This week, almost all of the pairs has played out nicely. What do we have right here? GBPUSD, that was mentioned in my live session as well, that same as AUD CAD, that if the price push back to the zone, it will turn to a trend continuation for the bearish opportunity. For this reason, I'll be focusing on this red zone for the possible sell trades with condition. Now, if you follow me, I go down to 1 hour as well, but let me tell you something, I have not taken this trade. I've taken the first one, not this one, but let me show you something, because if you follow me, you know the valid conditions. What do you see here? A bearish engulfing pattern. Exactly happened at the support resistance zone with the exact rules that has completed here. The way I teach my students. With the bearish engulfer, entry right here. Stop loss, let's say, somewhere here. Take profit, easily hitting 1.6 to 1, even 2 to 1 reward to risk ratio, easily with this trade. So everything was with the rules, nothing blindly. We had a zone here for the possible selling opportunities. Then we have what? We have an opposite of bearish. Exactly the same. You see the beauty. The price broke above what? The structure level, exactly same as bearish, broke below. Here we broke above. This level has been tested multiple times and a valid trend continuation. That should be trend continuation. Sorry guys, it's not a counter trade, it's trend continuation. I'm sure you guys have figured it out. Trend continuation support zone, therefore I'll be monitoring this area for the possible buy opportunities. So what happened is, the price pulls back down. Market is trending nicely, right? A nice trending market. Broke over the structure level. You see the structure is nice level right here. It broke over the structure level. And once the price pulls back, we have a double bottom, right? An aggressive double bottom on 4 hour. But if you're going back on 1 hour, what do you see here? A swing low, bullish, aggressive entry. On both time frames, that nicely hit the take profit of 1.4 to 1 reward to risk ratio. You see the beauty of that? Not every week is like that. Not every month is like that. But if you're disciplined, I'm sure, that's my experience, that's my own opinion, that even I have a losing streak, these type of trades can make up my money. And I've not added gold yet. Right here, I've taken this gold trade as well. Right here, in my real account. Again, I want to show you that I'm not someone who come down, give my analysis, and go away and not take the trades. Of course, I'm a full-time trader. Whatever I teach you, as much as possible, I try to teach you here on my YouTube. I do the exact same thing. My account is connected again, going on my IC Markets account, going on the gold. Right here, that was a winning trade. Exactly, I've just shown you. I've entered with the 2 trades, one with a smaller risk, one with a big risk, one with a small risk. I've done my risk management, hitting 1.6 to 1 reward to risk ratio target. If I show my winning trades, I also show my losing trades right here. That was a losing trade, but that was a winner. So right here on gold, nicely hitting the take profit. And that has happened on my real account with the exact rules, pullback entry bullish, I've just shown you. So these trades can make up with your losing trades. If you had previously, you can have a losing streak, but if you are disciplined, you know that you can able to make it in the coming month. Maybe not next week, maybe a week after that, but eventually, if your mental psychology, if your trading psychology is strong enough, then eventually at the end of the year, I always count my results at the end of the year, and you have already seen the results video of the last 2 years consistently profitable. So a good trade here, right here, that could be managed till the next level of resistance as well. It is something that's a long topic, but nicely hitting 1.4 to 1 reward to risk ratio target. So that is something I teach you, try to teach you every single day in my videos through my analysis, and hope you got a value out of that. So before I end the first part of the video, I want to show you the intraday trades I have mentioned to my students in the live sessions. Now, I only found 2 setups on 5 minutes time frame. I don't want you guys to overtrade, but it is something I will try to put a strategy in the course with the full rules. But as you follow me in the live session, I spot these setups for you if I find a good setups. For example, AUD USD going back on 5 minutes time frame. Right here was the entry on 5 minutes time frame. Accumulation was broken right at this red candle. That was already set in the live session, and let's see the clip from the live session, and then we can continue from there. That's the breakout setup AUD USD. Exactly the same. Go 1.2 to 1 reward to risk ratio because you're trading on 5 minutes time frame. Spread is there, and you want to get a better reward. So breakout below, go 1.2 to 1. But breakout below is must. So that is the breakout setup on AUD USD. Perfect. So broken below nicely and nicely pushed down. I've clearly mentioned to keep an eye on these 2 setups because I've spotted 2 setups, and you see how nicely that hit how much? 1 to 2 reward to risk ratio target. That also covers the cost of your trading, mean the spread or anything you pay to 1.2 to 1. That hit in how many days? Just in 7 hours. You are out, not even a day. So in an intraday trade, we have taken an AUD USD. Another one I want to show you very quickly. NZD USD. Exact same methods. You see, right here, accumulation was broken. Nicely fall. That is something I used to do for the scalping a lot. In day trade, that is my range, and I will enter my buy or sell trades. Preferably sell trades because we are below 50 EMA. So the way I'm going to enter is right at the close and break. Keep my stop loss somewhere above the EMA. Go 1 to 1 initially, and you can go 1.2 to 1 reward to risk ratio. So that is a breakout setup on 5 minutes time frame. Close is very important below. So both trades played out, clearly mentioned in my live session, and both hit the intraday target. This one hit in 5 hours, the other one hit in 7 hours. So it is something I personally do a lot when I have a good time to take my trades, but it is something I'll try to teach you in a members only live session as well to find the setups, and I try to increase my members only live session. In the coming days, I'd still need some support with me. Maybe I'll pick up some students who can help me up to do all that stuff, because doing everything alone is not an easy job. So let's wrap the first part of the video and let's start our analysis part, which is your favorite net gas, gold, silver, and crude oil, starting with natural gas. So what do we have right here? A perfect breakout. If you remember my last video, if you have seen that I've said that if the price break above this horizontal line, then you can start to look for a bullish engulfer. And let me show you the clip from my last video, at least to this recent levels. Now, in my yesterday's video, clearly mentioned if we are broken and close above this little anchor, which is right here, as you can see these two horizontal lines. In that case, we can start to look for the pullback entry bullish. Right here, this candle must close above this high, which is right here, and this anchor line right here. So if that happens, once we have closed, not just a wick, the body must close above. Once that happens, I'll just look at the normal pullback above 50 EMA, followed by bullish engulfer, and then I'm gonna go long and keep on taking longs as long as price makes another high until the price hit this level of major resistance, which is a trend resistance, not a level of resistance. Awesome. So what do we have? A break above, a retest of the same breakout area, which is a little pattern right here, a bullish candle that nicely pushed up. Now, let me tell you something. I have not entered this trade because it is not my entry, but my bias was bullish. For the traders who use discretionary approach, a breakout and a bullish candle is also an entry condition. I've also mentioned that I'll be looking at the price to hit the level above, which I'm still looking at, which is what? A nice channel where natural gas is trading from a couple of months. Right here, a good channel, a lower channel, and a high channel, and the upper channel. Now, we have a solid green bullish candle. It can likely to push up to this level. Now, this level is also a level of resistance, and this is also a resistance, a trend resistance. So, we have a highly likely chance the price will hit this level and then fall back to this zone again, from where we can start to see a push up again. Overall, on a daily, we are bullish. On weekly, we are bullish, broken above the zone. For the entry time frame, which is my 4-hour time frame, what to do next? As now we are broken above, now we have a cross here, a bullish cross. Simply look for a pullbacks and just buy with bullish engulfer. We have a very good chance the price will come back to the same anchor level, which is anchor line right here, as you can see, the horizontal line, or it can retest the same pattern, forms a bullish engulfers, and then push higher. So wherever you see a pullback followed by bullish engulfer, we are going to take a long trade using 1 or 2 ATR for the targets. Correction is expected because we can see some more momentum and overbought. Then correction will come in the play, and that is something we need to prepare ourselves for the possible entry conditions. So that is why we need to look at pullback and a bullish engulfer till the price at this level. Once the price break above this high, then I'll be looking at the level above, which is something I'm looking at for the future, for the price to hit. Don't know when, but it is something I'm paying attention for the price to hit. Not taking any bearish trades as long as we are above this channel. We are above this previous lows. We are not bearish long term. Yes, we can turn bearish short term if you have a dramatic move down, broke below 50 EMA till this low zone, which I'm going to mention if that happens. For now, just buy trades above 50 EMA. Coming on NEMEX, exactly same channel right here. As you can see, a clear channel on this platform, and we are approaching the trend line as well. So here on this platform, simply look for your pullback entry bullish. Pullback is expected, looking at this overbought. Pullback back to this recent anchor. As you can see, these two horizontal lines and these numbers, a very likely chance the price can come back down and push back up. Now, you can also use a Fibonacci tool here, which is like this. And you can also calculate your pullback to 50% retracement, aggressive entry, and then a possible push up from here. As the zone has been broken, the previous high has been broken, so 50% can react the price up, but I will recommend that wait. If you want to manage your trade, manage till this trend line from where you can see some good push down. So that's aggressive entry, pullback entry above 50 EMA, followed by bullish engulfing pattern. So that is all I'll be looking at. Just buy trades till here. Once broken above, then we are looking at the next zone, which I'm going to mention in my upcoming video. Now, I also want to show you how the market is trending nicely and using the previous levels as nice anchor levels. So quickly on a higher time frame, you see the price just broke above the previous high right here. And then once we are broken above, then we used this anchor as a support. Then we have break above, and then we had another anchor that was exactly our support as well. And then the price hit this level, forms a minor double bottom, and then broke above. So eventually I'm looking at this level of $5 area, $5 to $5.5 area. But for that, we need to break above this trend. And then again, the price, what's going to do? Simply another anchor and then the price will come down and retest and possibly push down. So that is something on a high time frame. It will take a while, and it is the process of the market. It is the algorithm, how the market moves, and that is what the technical traders look at. So be patient, but overall, as you can see, a nice bullish trend and nice bullish momentum and nice trending markets. On Wanda, nicely broken above the zone, an anchor zone, which is right here, these numbers in blue. All I'll be looking at, pullback entry above 50 EMA, bullish engulfer, and keep on taking longs. Now here on Owanda, I'm a zone above where I'm looking at for the possible sell trades, which is quite far. It is also a level of minor resistance, where the price is currently at this point. If you look here, it is a minor resistance. If you look back, price reacted from this level, right here, and right here. So I just don't want to distract myself. That is why I do not have these lines at this point. So all I want to see and expecting a pullback that is likely. This pullback can come back down to 50 EMA, deep pullback, or this trend line. Also that is possible, and then push back up. So all I'm looking at, a buy above 50 EMA, bullish engulfing pattern. Wherever we get 50 EMA, wherever we get a bullish engulfer above 50 EMA, we are gonna go long from here. So keep an eye, just buy trades on all three platforms we are looking at for the possible conditions. Now we are here on gold, nicely hitting the profits. We are not broken above the trend channel, which is on a daily time frame. Just to show you, symmetrical triangle on a daily time frame. Not closed yet. Close is very important. A solid close can confirm the bullish moves, which we do not have. Now, once we have a break above on a daily time frame, that's going to be risky entry. You can keep a smaller stop loss below this pattern and take profit. You can go 1-to-1, and then you can manage your trades to 2 ATR or possibly this high. Now, again, the elections, the US elections are coming. It can destroy all the fundamentals, and gold can fall as well. That is why I'm saying once Trump taken the White House, then we might see a dramatic push down. I'm repeating that again and again to back to this level right here, 2515.12. That goes to 2539.42. So that is something we are talking about the fundamentals. Technically, once we are broken above, pullback with a retest, bullish engulfer will be a solid entry. Break itself can be an entry, and that can push the price at least to this recent highs, exit, and then see what to do next, which I'm going to inform you in the upcoming video. So that is something I'll be looking at on a higher time frame. On a smaller time frame, very simple. Let the price form some more pullback. Above 50 EMA forms a bullish engulfer, and just go long till this recent highs. But first, 1 ATR targets I'll be taking initially. Exactly like this, I set up 2 trades, 1 ATR and more than 1 ATR. So if I see another conditions above 50 EMA, bullish engulfer, I'm going to go long using 1 ATR for my targets, and then I manage my trades something like this. So keep an eye, only buy trades, but with a pullback, correction is expected. So I'm expecting some deep pullback above 50 EMA. Next up, we have silver. So as mentioned in my last video, clearly, retest has been done, a break above has been done, and what I've said that a break itself is an entry right here, stop loss here, take profit something like this, 1-to-1, 1.2 to 1 reward to risk ratio that has hit the take profit. I clearly mentioned in my last video. Let me show you the quick clip from the last video. The break itself is an entry which is very aggressive entry. In that case, I'll keep my stop loss below and take profit. You can go 1.4 to 1, initially 1-to-1. Right here at the break, stop loss below the neckline, something like this. 1-to-1 looks something like this. Perfect. Nicely rejected and nicely pushed back up with this aggressive double bottom entry. If you're my student, you know what type of entry is that. For now, simply a pullback above 50 EMA. If we have that bullish engulfer, and just gonna go long and keep on taking longs as long as we're nicely trading above 50 EMA, and until and unless price hit the next level of major resistance right here, from where I'm going to look for my bearish trades with double tops or bearish engulfing patterns. So keep an eye, only buy trades, not selling, just buying. If you are waiting for the pullback entry, that is something we need to look at. If you're managing this trade, manage your trades till this recent anchor level right here. Next up, we have crude oil. Nicely hitting the targets. If you have not seen the first part of the video, then let me show you the clip from my last video where I've mentioned this entry so that we can understand conditions and entries. Nicely pushed up, a nice bullish engulfer. Now, as mentioned yesterday, aggressive entry was triggered here, and then we have a deep retracement. Now we have a pullback entry bullish. So for now, just buy trades. We can see a possible push up for the next pullback entry. You're managing this trade from this bullish engulfer. You're good to manage these trades to these recent highs. If you're an aggressive trader who's already in the trade right from 50% retracement, then 1.618 retracement is something I'm expecting a price to get to 76.66, from where we can see a possible push down. Perfect. So that is what you call patience and taking your trades with conditions. Aggressive entry played out, less aggressive entry played out, entry from the zone that was sent to the members right here on 5th of January. Look for this zone, look for the pullback, has been played out. All three conferences, good factor, and that is what we call taking your trades with the right rule and education, not entering your trades blindly and not gambling the market. Hitting what? 1.8 to 1 reward to risk ratio targets. Now what to expect from here? Of course, market will likely to give a deep pullback. Now I want to mark the next level of resistance, which is right up there. 81.87 goes to 83.65. I'm going to update these zones if I need to on Monday, but for the members, you're going to receive these zones on Sunday, the accurate zone. For now, I have these zones there, but it is a level till where I'm expecting a price to get to and then a possible push down. Price is still at the level of resistance, which is right here. That is also a level of resistance if you look here, but I'm not using this level for my possible counter trades. Yes, if you're someone who looking to take your trades on smaller time frame like 1 hour or going back on 30 minutes time frame, first on 1 hour you have an entry right here. On 1 hour, double top is something which is very good if you want to enter your trades on 1 hour from this minor zone. So on 1 hour, expect an entry and expect a push down from here, a pullback from here. And on 30 minutes, you can also look for your entry. So coming back here, price is at the minor level in case you want to draw these zones on your charts, which is something like this. 76.44 goes to 77.93. Again, I won't be using this level, but for the intraday trading, you can use this level for the possible push downs if you want to enter on smaller time frames. So from here, expect good pullback. It can be pullback to this zone, back to this zone again, which is 71.00 goes to 72.47, or expect a pullback above 50 EMA, simply pullback entry above 50 EMA, and I'm going to go long from here. So that is what I'll be looking at. Pullback entry bullish, possibly retest of the previous anchor that was broken, a pullback and bullish engulfer can happen right here, and I'm going to go long and keep on taking longs till the price at the next major level of resistance. So let's change the color it to yellow because I like the orange or yellow zone for my minor area. So expect a deep pullback looking at this minor level that has reacted nicely in the past, and then a continuation towards the upper level, which is something I'm looking at for the long term. Once we are broken above, the price will likely to push up to this level. For now, I expect a retracement and then push back up. Finally, we're adding US cocoa. The reason I was not doing US cocoa analysis because I don't see any good setups here. But now, US cocoa has formed a little pattern, which is kind of symmetrical triangle pattern. We had a little fake out right here, but the price nicely used a lower level as a support right here. So looking at that, a breakout below can push the price lower dramatically. And a breakout above, a solid candle, that is also a good candle, but a solid candle that is way above this pattern that can confirm the price to push up to these highs. So that is what I'll be looking at. That is all. There is no levels. At this point, a pattern right here that can nicely react from a broken below. If you want to wait for the extra confluence, then 2 red candles can confirm. Same for the above. Or pullback or break above, a pullback, retest, bullish engulfer can confirm the less aggressive entry, opposite for the bearish. So that is what I'll be looking at here on this platform for the possible entries. So that is it for the long video. I hope you guys have made it to the end, and I hope you guys have learned something out of my analysis. If yes, hit the like button, subscribe. It really helps me in the YouTube algorithm. Hope you trade green, and I'll see you guys in the next video. Have an awesome weekend. Take care.